Hello and welcome back to Proactive New York. Joining us from Chesapeake Bank is Kevin Wood. He's the managing director of Flexent, which is a division of Chesapeake Bank. Kevin, it's great to meet you. How are you?
Doing well, thank you.
So Kevin, from my understanding, Chesapeake has rebranded Flexent from what it was formerly called as cash flow. Tell us a bit about Flexent and what it does.
So Flexent is a division of Chesapeake Bank that offers factoring and asset-based lending to small and medium-sized companies throughout the country. What we have found is a lot of banks no longer offer receivables type financing. So we have been able to offer this to a number of companies to really help them finance their growth.
So why have you gone through the rebrand from cash flow?
Well, what we found in our attempts to expand our digital marketing is that cash flow is non-trademarkable. So we worked with a branding firm and they actually made up the name Flexent because the feedback they got from our clients was we were very flexible in helping companies grow their business and be as accommodating as possible to meet their needs. And so the term is totally made up, but it's very applicable to who we are and what we do.
Right. Yeah, definitely makes sense. So who should be using the service? Who should be taking advantage of Flexent?
So it depends on who you talk to, but 15 to 20% of the small and medium-sized businesses in the marketplace don't really fit traditional lending models. Either their growth rate is too high, or they work with very slow-paying customers, Fortune 500 type companies. They also might have a challenged balance sheet for whatever reason. So those are companies that really can benefit from cash flow, next day cash flow, but they just don't fit the traditional bank models. Those are our best fits.
And so two of your primary products are accounts receivable financing and asset-based lending. What are the benefits of each?
So on asset-based lending, where we focus is the smaller ticket market. So typically the large banks like deals 5 million and higher. We generally only work with 5 million and lower. And what we do is we leverage their accounts receivable and their inventory to be able to give them a true borrowing-based product. On the Flexent factoring product, what we do is provide next day cash flow for companies. So if they invoice a large customer today, rather than waiting 30, 60, 90, 120 days to get paid, we can give them cash that next day. They can pay their suppliers, pay their employees, keep moving on to the next job, and we'll turn around and wait at a very reasonable rate of cost.
So what is your outlook on how this type of alternative financing will grow?
So I have been doing this for about 25 years, and our trajectory has historically been moving upward. However, the pandemic last year really hurt our industry. So if you look at the industry-wide statistics, most companies were down 30 to 50% or more. We were down about 30%. And it was a combination of the companies not being able to do their services, the supply chain disruptions, and the government money, the PPP money and the EIDL loans they supplanted what we do. So the whole industry has been down approximately 30%. However, in this last few months, we have seen a significant uptick in business. And I anticipate 2021, fourth quarter, and all of 2022 to be pretty strong because balance sheets are not going to look as good as they did going into the pandemic. Needs are going to be greater. And there was a recent article this week in American Bankers magazine that said traditional banks are doing less and less C&I lending, and we kind of fall into that bucket. So non-bank entities, and we are a bank-owned, but we compete with the non-bank entities, is equal to bank-owned C&I lending currently.
So you are seeing more businesses take advantage of these services?
In the last 2-3 months, we have seen a significant uptick back to more normal levels.
And just before I let you go, just give us a sense of why businesses should choose this service versus perhaps other bank services.
Well, again, the traditional fit of the receivables financing and ABL, we fill a niche that is just really not offered by the majority of banks in the country. And then a lot of companies are left looking at non-bank entities, online lenders, equity firms, different things like that. So what we've tried to do is create a bridge where you can work with a bank, that's a state chartered FDIC insured bank, all the safety and security and soundness of that, along with offering these unique products that are just not available in the marketplace. So what we've tried to do is give a low cost solution to a company to help them meet a need. And we've had helped thousands of companies over the years, and they're all very appreciative and thankful that we exist, because there's not a lot of options out there.
Definitely. Kevin, really good to learn more about Flexent. Thank you so much for the time.
Thank you. I appreciate your time.